Have you ever seen your order block getting completely disrespected, getting ran through, right? In today's video, we're going to be talking about how to spot a high quality order block, how to spot a higher probability of an order block, and how to not get manipulated and lose on every order block you trade. Not over every order block should be the order block you should be taking, right? So today we're talking about how to spot a higher probability order block. So let's go over it, right? Quick example of a order block getting completely disrespected, getting ran through, right over here. Hourly order block, high time frame order block as well, completely disrespected. So before we start, why did it get disrespected? Let's go over what makes a order block a really high probability order block. There's three things you need: time, higher drawn liquidity, meaning objective of the market, higher time frame by the way, and last thing is sessions, right? Time meaning during what time are you taking that order block. It cannot be during, it cannot be outside of a session. It has to be during a session. Two, right? Higher drawn liquidity. So if you're using a 1 hour order block, the 4 hour drawn liquidity has to be with you. If you're using a 15-minute order block, the 30-minute drawn liquidity has to be with you, right? Because why did it get respected? What is the objective of the high time frame? 4 hour drawn liquidity is bearish, so the obvious drawn liquidity is right down here, because fair value gap, fair value gap is one of the drawn liquidity. Sales liquidity the market has to go back down here before it proceeds to go up higher, right? So that the drawn liquidity is bearish. This is right here is bullish. What did the market do? Completely ran it through, right? So a high probability order block, as I said, time, drawn liquidity, meaning higher time frame, objective of the market, and usually at one time above the order block you're using. If I'm using a hourly, the 4 drawn liquidity has to be with me. And session, it has to be during a session. It cannot be during outside a session. Well, and Bobby's saying, yo, isn't time and session the same thing? It is. I just wanted to make a better claim, but I think other than that is there anything else? No, it's just two things, right? So drawn liquidity meaning objective once again, and other than that it means session time. It has to be during the time, right? So now let's go over why does it get respected. As I said, I already went over it. 4 drawn liquidity was bearish, so this got completely ran through. This order block right over here, what happened to this order block? Respected, right? What did the market just do from there? Right, touching that pushy cloud, bomber cloud down there, right? So it's very easy to trade order blocks. You can see this order block got touched during what time did this order block get touched? As I said, during a time matters. So this order block got touched during what? London session, right? So this order block got touched during London session. He has to get touched during a session. If it didn't get touched before a session, I mean, if it gets touched before a session, usually it's not a high probability setup. That's why I say it has to be during a session, right? Other than that, is the order block high time frame drawn liquidity is bearish, right? So this high time frame drawn liquidity in this order block, the 4 drawn liquidity is bearish, as I said. 4 hour bias is bearish because 4 hour bias is bearish first of all. And other than that, 4 hour drawn liquidity is bearish because market wants to go down to the drawn liquidity right over here. What did the market move on? Liquidity and fair value gaps, right? So this order block is a really high probability setup. Right now, if you go to the lower time frame, 55, let's go to 15 minute, right? Because we could find another one, right? Now this order block right over here goes with what? This order block goes with a higher time frame drawn liquidity as well, because this goes with a 30 minute drawn liquidity is bearish. You could see market touches fair value gap. Now where's the next drawn liquidity? Obviously down here, right? So this order block, really high probability setup. Now how can you execute out of this, right? So we're looking for a 15-minute confluence. We got another super liquidity. Now we got a 5-minute. We're looking for a 5-minute confluence. This order block, right? This order block goes with the 15-minute drawn liquidity. It's powerful. Now go to 1 minute. You're looking for execution. Perfect execution would have been here. I did not take the trade. It's just because the reason I didn't take the trade, I fell asleep. It was yesterday. I fell asleep, right? just because man, I don't know, I shut my eyes and I couldn't wake up back. But you can see right over here, completely ran through this other order block. This right here is the hourly order block, ran through. Look what the market just do. People would usually put a buy limit over there, go for long. So what the market do, ran through that low, ran through that order block, right? That right there is a high probability order block. Why is it a high probability order block? I said two things, right? I don't want to say three, I just mean just two, because time and session is the same thing, right? Two things. Why did it get respected? One, the 4-hour drawn liquidity is bearish, right? The 4-hour, the order block got touched during a session, and before that session the order block never got touched. But if it gets touched before that session, not a high probability order block. So keep in mind, always keep in mind, it has to get touched during that session. It has to be with the high drawn liquidity, higher time for drawn liquidity. Or sometimes we'll get respected, something will get disrespected, right? Nothing is 100% win rate. Nobody has 100% that, yo, this order block will work 100% of the time. No, it will not work 100% of the time. Even if I'm telling you there's a high probability, something won't work. You can see, you're probably saying, "Wow, okay, now you said that. Now you got another order block right over here, right? Now you got another order block is an hourly that goes with the 4-hour drawn liquidity, right? But guess what? It actually doesn't go with the 4-hour drawn liquidity. Why does it not go with the 4-hour drawn liquidity? Look at the 4-hour bias. What did the market do on the 4-hour time frame? Took out liquidity. Perfect example of a low probability order block. You can see it getting respected, right? But your ideal goal from this order block would be where? Down here. And guess what the market just do? Never took out that low. And people, when they put a take profit, the spread is not gonna go hit shit, right? So if the market is here, your take profit is over here, spread is gonna make it be right over here. So market has to ran through that for it to TP. It never hit the ideal goal of the market where the market wanted to go, right? So this order block, you can see, got respected plenty of time. Guess what the market just do on the order block? Eventually got ran through. Look at this huge wick with huge body out of it. This order block got ran through. This other order block right over here got respected, right? Because this other hourly order block went with the daily, with the 4-hour drawn liquidity. 4-hour drawn liquidity was bullish, right? Market ran through this, boom, right? You can see this this hourly order block went with the 4-hour drawn liquidity. 4-hour drawn liquidity was bullish. Why would the 4-hour drawn liquidity bullish? Market took out a low. The nature drawn liquidity is obvious to the upside. Took out this low, took out this high, and took out this side. They all became wrong liquidity, right? This is what I'm talking about. The higher time frame drawn liquidity matters, and the time session matters. But you're saying, well, you're wrong now, because you just said this order block got touched during that session. Look at the time when it got touched, right? You gotta use your brain sometimes, right? Look at the time when it got touched. That's what I'm saying. Time and session really matters. After 5 a.m. London session, right when it hits 5 a.m., London session is over. London session kill zone is over. This order, very, very nice of example. I'll give you guys a very nice like, you know, a way to explain to you guys. When I say session, it has to be during a kill zone. A kill zone matters so much. Session, it has to be during a session, it has to be during a kill zone, and it has to go to high time withdrawal liquidity. Kill zone is the most important thing, because right when it hit 5, this right here is 5 a.m, right? Right when it hit 5 a.m, the kill zone is over. No more volatility in the market. Guess what did the market do right after that? Just mess around, right? That right there is a perfect example of, you know, high probability order block versus low probability order block. This right here is the low probability order block because it got touched outside of it during outside of a kill zone, and the higher time frame liquidity is bullish, got completely disrespected. This one got respected because this one with the 4-hour liquidity and is in a kill zone, really high probability. This one went against the 4-hour liquidity, right? And this one right here, although it went against the 4-hour liquidity, right? Oh, you can say, well, you're saying now, well, this one is during the kill zone. How did you not get respected? Very simple. Drawn liquidity is what truly is in power. And what you could do, what I mean by kill zones and sessions, right? That all that means is that that's when you should begin looking for a trade. So you're using this to look for a trade. Say, well, when there's a kill zone, that's when I'm looking for trades, right? When it's out of kill zone, I'm not looking for trades because there's no more volume in the market. This one, all you're gonna say, okay, you got touched during a kill zone, but the high time frame liquidity is bearish. You gotta, you know what I'm saying, you gotta go with me, you know, so you gotta feel me. So high time frame liquidity is bearish. So, and it's kind of hard to explain this, right? Probably saying like, yo, but it's during a kill zone though, right? Probably thinking like that right now, right? Although it's during a kill zone, higher time frame matters. Higher time frame, this goes against the higher time frame. This goes against the higher time frame drawn liquidity. This goes against this all it got touched during a kill zone. There was literally no entries to get in from here, so you could see no entries. Usually we always look for we'll always look for a confirmation. We look for trades, no confirmation, no entries, right? So boom, completely destroyed the TP, right? It's probably confusing for some of you guys to like explain what you mean by at least saying, well, there's two factors you said, kill zone and high time frame drawn liquidity. High time frame drawn liquidity is always more powerful than a kill zone. You just use the kill zone auto blocks, right? When this got touched during a kill zone, I'm constantly repeating myself because it's kind of hard to explain this, right? When it got touched during a kill zone, you're first looking for a confirmation. Did we get any confirmation that he wants to go up higher? No. I completely ran through. Second thing, what are we looking for? We're looking for the high time frame drawn liquidity. So the high time frame drawn liquidity is bearish. So that's got completely disrespected. No confirmation, no high time frame drawn liquidity is being with us. But he's saying it's during a kill zone again, right? How can I say this? It's during a kill zone. He got touched during a kill zone, but it's going to get the high time frame. That's all I could say. He cannot. The auto block. What truly matters is he cannot go get the drawn liquidity, high time frame drawn liquidity, because this auto block is bullish. The high time frame drawn liquidity is bearish. It went bearish, but although it's during a kill zone, I'm constantly repeating myself. It's pissing me off, right? So when it got touched like that, it got touched during a kill zone. But fuck, how do I say this? It's kind of now I just messed up. Like our high time frame, what really matters. All these got touched during a kill zone. As I said, nothing is 100% with success rate. This got touched. Always be in mind that no, actually we're using this hourly auto block to take a trade out of it, right? But we never got what we're looking for. This auto block. This auto block got touched during a kill zone, right? Which is 2 a.m. to 5 a.m. But guess what? When this auto block got touched, there was no confirmation that the market wanted to go to the opposite way. No 5-minute breakout structure to the upside. No 5-minute confluence got respected. Completely ran through. Boom. Right. So this is how you could use auto blocks. This is how you could spot a high quality auto block, high probability auto block. Always make sure you have two things checked. Is that auto block going with the high time frame drawn liquidity? If you're using an hourly, 4 hour, if you're using 15 minute, 30 minute, 30 minute drawn liquidity has to be with a 15 minute. The 15-minute order block has to be with the 30-minute drawn liquidity. The hourly order block has to be with the 4-hour drawn liquidity, and the 4-hour order block has to be with the daily drawn liquidity, right? That if you want to get that checked, did that order block get touched during a session? Did it get touched during a kill zone? If yes, check that out, and that right there, you're gonna make a high probability setup, right? Even if it's a 1 minute before, a session, that order block will get disrespected. Let me give you guys a quick example of that, right? This order block right over here got touched. When did it get touched? This order block right over here, you can see bearish order block. Now you're saying the 4-hour drawn liquidity is bearish, right? Because where's the market on right there? 4-hour fair value got to the downside, right? Prior to that, with that, what is the market? What time did the market touch it? It touched it at 1 a.m. So now that order block is no longer high probability order block because it got touched during a session. What did the market do? Ran through it. Really valuable video. If you guys like my explanation, join my Discord. If you guys like my videos, let's join my Discord. Comment what you guys want to learn about. Comment what you guys want to see in the future. If you guys like it, please make sure you comment, like, Other than that, join my Discord, man. Free signals from me and my professors. Not even me, trade ideas. My professor has 7 years experience, 3+ years probability, and all about price action and supporting resistance. Really fucking Oh, if you want to patch it, fund it and everything, join the Discord. Other than that is, yeah, there's a video. Make sure you join my Discord, link in the description. And yeah, man, make sure you comment. Thank you for watching.